Hi everybody, this is Gary Dean and this is our another video report for Thursday, April 28th, 2016. So today kind of felt like a flash crash, and the reason why is the bulls haven't really been tested like this. It's still struggling at the same areas as far as breaking resistance, and believe it or not, even with the big day down today, we're still within that range, which I'll show you in the other charts. So just to run through, I mean, no sense really beating a dead horse. This is the advanced decline. Obviously, we're at levels we've never seen before. This is the VIX, and this actually you can see is updated today. And resistance zone for the S&P, support for the VIX. The VIX was up almost 11% today. So everybody that has made this trade that this time is going to be different, they found themselves getting crushed. And I'm not really looking for say this type of move. It may very well happen, but it's probably going to end up we're going to see a lot of chop before that big move actually does happen, if it does. Right now I'm just trading really this area right here, so it still should have a ways to go before it's all complete. So taking a look at the put call ratio, this is from yesterday, so you can see it's at extremes right here. This is not the area that you want to be buying because everybody's loaded up on calls. And again, just looking at the bullish percent, flatlined as the S&P has been going up, so it's been a pretty big bearish divergence that's been in place with stocks and the overall breadth. And finally, this is a chart that I showed in the trade room, and I'll kind of show you what I'm talking about. So this is the S&P on a daily chart. So this is the top that we made back in July of 2015. Boom, boom, we collapsed. And then from there, what happened was we had a very big rally straight up. Everybody was now looking for the 2150, 2200. When we were here, this market wasn't going down, and it made it right to the secondary high here. So you remember, this is when the S&P had the big drop, then it spent a few days coming up, and then once it failed to take out these highs, things turned around and then collapsed. This rally made it right up to that secondary high, bounced, came back up, never took out the highs, and then collapsed. Well, the crazy part about this, and I just kind of noticed it today, is this is now today's move. And here was the previous high that this rally tried to get through and didn't make it, and that was when it collapsed. And that is pretty much right where we made it to here. So it's a very similar type pattern, and if you notice, this was our move down today. So are we going to get two big down days like this? Or actually it would be here. But you could see that the move down on it, if it's going to follow this pattern, has a pretty good ways down. And it's just very interesting because we have the bearish divergences as well, the same setup. Everybody on TV is now bullish, and from there, that was actually the exact area that you wanted to be selling. And once the market did drop, we never heard anything from the bulls that were telling you to buy until just recently. So they've pretty much been out of the market, and now they're back in telling you to buy. And it's most likely going to be very close to a top. So running through just the regular charts, I really didn't even have to change anything. And reason why, daily chart, we have our 5 waves. Bearish wedge that broke. Typical retracement would be anywhere 1960, 1925, or 1874. You know that. This is the support area. So the bulls continue to fight like anything to hold this, because if they lose it, it's going to be a reaction drop down to the 2035, 2030 area, and most likely even testing this 2015. Once we start breaking this level, that's when I believe we can look at these targets right here. But right now, it's we're at the area that the bears need to push through right now, even with the big down day. Looking at the hourly chart, you can see we're still nowhere near oversold yet. This is that support area. It looked like it tried to hold. So let's say they have to break through this the moving average at 67. Let's just call that a line in the sand. If they get through it, then that's when the reaction drop comes down to that 2040, 2035 level. And again, I still think we're retracing all the way down here before everything is said and done, but we're probably going to get some big bounces along the way. That's the good thing about when we're heading lower is you get big moves in both directions and you can trade them. And, when it moves up, it's just boring because the drops are really quick and then they head right back up again. So finally, on the 15-minute chart, you can see we're getting pretty oversold here, but we don't have any bullish divergences setting. So what that would actually imply is that we'll get some bounce and then down again, which would set up the bullish divergences, and then that would allow for another counter trend rally. But if this was a wave 1 and this is a 2 and now we're starting a 3, we may not, it would make sense if we get that bouncing down, but there's a shot that we may not get it and we could head straight down. But with the wave count wise, because you can see 1, 2, 3, and if we got a bounce 4 and then 5, that would be, a normal wave count for some type of retracement, which would probably take us someplace back up into the 2090. But like I've been saying, this market is all in on both directions. So as much as bounces or pullbacks would make sense, we've seen it every single day where, things just don't happen as planned. So maybe just kick something off. I still think the bulls need to get it through that 2070 area before we really see momentum getting going. And let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.